Hello, everybody, and welcome. My name's Susan Crawford. I'm an emeritus professor at the Harvard Law School and a senior fellow at the Carnegie Endowment for International Peace in Washington, D.C. We'll be talking about a number of climate resilience strategies and opportunities. I want to make clear that none of the speakers here is speaking for Harvard University. We're also very grateful to the Bloomberg Center for Cities at the Kennedy School and the university more broadly for putting this together and bringing us together to bring you this webinar. So today is Earth Day, April 22nd. Gaylord Nelson, senator from Wisconsin, had the idea for Earth Day in 1969. He'd seen the dramatic oil spill in Santa Barbara and thought that people needed to learn more about the environment. On the very first Earth Day in 1970, 20 million Americans, 10% of the entire population at the time, participated in Earth Day. But what really helped it move along was the image of the Earth taken from space by the Apollo 17 astronauts. And I'm sure you can bring that to mind right now. You see this vulnerable, fragile, lonely blue marble in an endless black void. And you know that it's teeming with life. Earth Day became an international phenomenon in 1990 and has been going on ever since. It led to the creation of the Environmental Protection Agency, the launch of the Clean Water Act, the Clean Air Act, and it brings us together today. So let's zoom in on that image of the Earth. Let's look at America, and we can see that it's being pummeled by extreme weather events that are happening increasingly and are increasingly intense. Something like 40% of Americans live in regions that are experiencing extreme weather. We have to reduce emissions, but even if we did that today, the catastrophic impacts of weather are happening, and they are speeding up. An overlay, conceptual overlay on this story and on this visual is the question of insurance. Insurance keeps property markets rolling. It backs up mortgages. And as we see insurance becoming more expensive in riskier areas, and some insurers withdrawing altogether from markets they view to be unprofitable, that's sending a signal of risk. It's also making it difficult for low-income, vulnerable people to keep on top of their mortgages. What they thought was a fixed-rate mortgage might become an adjustable-rate mortgage over time as insurance costs go up. It also signals that perhaps we should do something to help, and we're here to talk about what might help. We could reduce physical risk by changing where people live and where and how they live with building codes and other efforts. We could think about new kinds of insurance products that trigger automatically so that people are helped through disasters and recovery without having to wait for cash to come their way. We could also think about insurance as motivating us to change how we govern systems in America to help more people live thriving lives in our country. So that's a very broad introduction to a fascinating topic. I'm very fortunate today to be joined by three discussants who know a lot about this. And Roberson, who manages the Safe Home Mitigation project for the South Carolina Department of Insurance. So helping people afford fortified roofs and be better prepared for hurricanes. Also joined Makisha Williams, who is coming to us from the Miami Foundation, where she's the vice president for community engagement there. So on the ground and in community. And then Carlos Martín, who is the vice president for policy and engagement at Resources for the Future, and also the director of the project on remodeling futures for the Harvard Joint Center on Housing, so wearing multiple hats today. I've asked each of them to begin this conversation by talking to us about what they do and how it fits into this complex and ever intensifying problem. So Anne, let's start with you.
Well, thank you. I am with the South Carolina Department of Insurance, and in 2007, our General Assembly passed legislation, which was signed into law, creating a number of incentives to help incentivize homeowners, making their homes more attractive to, attractive risk, and also gave some incentives for insurance companies as well. To make them want to write. We do not mandate insurance coverage in South Carolina, so we want to do what we can to make sure that folks are as prepared and know the things to do. So we've been doing this since 2007 and have helped over 8,500 families at this point.
We look forward to hearing more about that program. That's fascinating. Nikisha, over to you.
Yes, so I lead collective impact at the Miami Foundation. We are a community foundation that is invested in really making sure that our entire community can thrive. And so what that looks like is us investing in community leadership. It is us investing in nonprofits. It is us being able to take risk and be innovative. And so we say we are ground zero for climate change just based on where we sit. And so climate and disaster have been two issues that our foundation cares deeply about because it affects our community's ability to thrive. And so we've been able to do some interesting and innovative things in that space, just given the fact that, we're all trying to figure out what we can do and how we make sure that we can be as resilient as possible. And so we're trying some new things out, which I'm excited to share.
Looking forward to hearing about it. Carlos, over to you.
Right. Well, I'm a researcher, and I entered this specific space from the lens of housing about 20 years ago, and it was from the lens of disaster recovery. So what households, what local governments, state governments, and the federal government was able to do to help bring recovery resources as quickly and as timely as possible, as effective as possible. When you're in the disaster recovery space, you realize there's a lot that could have been done before the event happens. And so that includes appropriate insurance, it includes appropriate risk mitigation strategies, it includes community cohesion programs. So there was a lot that we started seeing could have been at least thought about and planned for before the event. So that's where I'm approaching the subject.
It's so valuable to have all of your perspectives here. Let's start with some gap identification. So Anne, especially for low-income vulnerable populations, what are the gaps you see in this insurance issue?
Well, I see, we just recently finished a study with the Robert Wood Johnson Foundation and really looking at the impact that disasters have on communities, low to moderate income communities in particular. And we found that it ran the gamut. I mean, we saw not only did you see gaps in the ability to have coverage, to even really understand what their coverage was, if they did have it. We saw health impacts. People were still trying to recover several years later, and they would be hit again with another storm. So repetitive flooding in particular. And so you have mold growth, you have infestations, you have a lot of things that people are really trying to grapple with. So we look at trying to help people from a resiliency standpoint, but to me, it really is a much larger topic that involves a lot of outreach, education, awareness, and just helping them walk through it all, preparedness, et cetera. So.
And geographically, where are you focused when you're talking about these populations?
We have a series of rivers that combine and flow into the ocean. And so the project area that we worked on specifically was the PD watershed, PD and Santee River watershed areas. And that also is home to numbers of heirs properties and things like that. So land and property that has been held in families for generations, and trying to help them save what they have and be stronger and withstand what comes in the future.
As we go on identifying gaps, Nikisha, Carlos, what gaps do you see?
Yeah, I just want to build off of that because we see this in Miami as well. So one of the things that we see is that it is hard, low-income communities, it is hard for them to prepare. Right now, so many people are paycheck to paycheck that when you talk about going into disaster season or hurricane season, there are things that lots of folks do to prepare for the season that we find that people in low to moderate income communities or families, they just can't do that. And then after a storm, we know that it takes them the longest to actually recover. Oftentimes resources are coming into low income communities. It takes longer time, so they're getting resources last. And so as we think about how we're supporting our entire communities, we're oftentimes looking at what are the most vulnerable communities so that we can make sure that our resources are going there first, knowing that it is hard for them to recover. It is hard for them after the storm passes, and to your point, long after that storm passes, they're still dealing with the effects of it.
And Carlos, with your broad research into housing, how would you identify gaps in this insurance story that are important for the populations?
Sure. There's so many ways we could take this. Number one is realizing that we're at a point in the country's history where we have the oldest housing stock on average. 41 years is the average house across the United States, right? So we had a building boom in the post-war era, and those homes were built to different standards for a different time, without the expectations of what the future future hazards would be. And certainly that's still an evolving question about what the variation that we're going to be seeing. So number one, I would say the biggest gap that we see is between how we thought the world was going to be in the past and how it will be in the future. That's just an overarching comment about how we need to rethink about rebuilding, not necessarily rebuilding post-disaster, but also rethinking about how our properties and our buildings function and are useful. The second one is this gap between the regional infrastructure that we've created and the individual properties. Many people know I'm an amateur historian. I go back to the Great Chicago Fire, to the Great Mississippi Flood that led to the National Flood Insurance Program, for example. And we know that there was an unwritten contract between local governments and insurers, where if local governments built levees, seawalls, various protections, that the insurers would be able to insure the properties within that. That contract has been ripped apart over the last several decades, mainly because the risks have just become so extreme that we can't gauge how to create that new contract. And so that would be another sort of overarching gap I would add to the mix.
So Nikisha, I want to move to you talking about, you mentioned things you've been experimenting with in Miami. And Miami, on the front lines, always in the news for impacts, the physical impacts of extreme weather. So talk to us about what's going on there.
So last year, we decided to take out a parametric insurance policy to really infuse additional dollars into our community in the case of a disaster. And so if I were to maybe rewind just a little bit, I would say that the Miami Foundation has been thinking about climate and disaster for many years. We are part of the Resiliency networks. We have Resilient 305, which is a collaboration between 3 of our municipalities as well as the Miami Foundation, really pulling together a community-wide resilience strategy. But what we know is that every single year we brace for disasters. And so a few years ago, the Miami Foundation started what's called the Miami Disaster Resilience Fund, which is a collaborative fund in which many folks in our community have donated and said, we know that it's not a matter of if, it's a matter of when a strong storm will hit our communities. And we want to invest in advance to make sure that there is a stable fund that exists in our community so that we can make sure that we are as much as possible ready. And so what we do is at the beginning of every hurricane season, we are donating to nonprofits in our communities so that they can work with their communities to prepare, but it also ensures that we have some dollars to invest not only in what our community needs immediately after a storm, but also for the long term as well. And last year we decided to do something different. And for us, that meant taking out a parametric insurance policy that would allow us to pour additional dollars into our community in case there were a storm. And so for those who are not familiar with the parametric insurance policy, it is a policy that is based on parameters. So when a trigger hits, that payout happens. And so that is different from other policies in which oftentimes you have to actually show the damage in order to receive the funds. And the beauty with the parametric insurance policy is you actually get that payout relatively quickly, which, as we know, when you're in a disaster, that is what you need. And so our parametric insurance policy worked where it covered the entirety of Miami-Dade County. It was based on wind speed. So for us, it was if there is a category 4 or 3, 4, or 5 storm, we would receive different payouts. And for us, what we wanted to make sure those funds did was to be able to support the nonprofits who are already at the front lines providing support in our communities. So going back to my comment about the most vulnerable communities, we believe fully that nonprofits are on the front lines of this, because when there isn't a storm, our nonprofits know the single mom who has, who's living paycheck to paycheck, or the elderly woman who does not have family around her and really needs support. And so when we talk about supporting the direct community that is most vulnerable, that needs to support, our concept is to pour money into those nonprofits who can then funnel those dollars into the community, and they know exactly where that money should go because they're already in the communities working day in and day out, not just when a disaster hits. And so that parametric insurance policy, again, would give us additional dollars to invest in our community. We were lucky last year, although Florida wasn't lucky and we saw a handful of really strong storms. Miami did not see any strong storms. And so this year, we are looking to hopefully renew our policy that will allow us to continue to test out this model as just an additional source of funds that allow us to invest in a community that, again, it is not a matter of if, it is when.
So many innovations in there. So a trigger, right? Although it didn't trigger this time. A geographic area that's much broader, so not putting it on individual shoulders, and a payout that goes to nonprofits.
Correct.
So that they can continue to serve people.
Yes.
I want to have Anne add in here on tell us all about the Safe Homes Fortified Roofs project. That's another interesting element here.
Well, so we, we've been retrofitting homes and providing grant funds to homeowners throughout primarily the coastal regions. We are looking at trying to go larger, go throughout the entire state. And as we've worked with, like I said, over 8,500 different families in trying to help them strengthen their roof. And we also provide opening protection. So storm shutters and garage doors and that sort of thing, impact windows, anything we can do to help them strengthen that envelope of that structure. We recently were impacted last fall by Helene, and we've seen that really, while our coast did suffer some damage, it was primarily, as you know, the storm's track. It went up more through the middle part and the western part of South Carolina, and it had some very severe impacts, strong wind damage. So as a part of our efforts through our emergency management division, our state agency there, they have pulled in VOADs.
What's a VOAD?
It's a voluntary organization made up primarily of nonprofits and those sorts of organizations and associations, and along with state and local government and other entities, organizations, agencies within the state governance, to come in and try to help those homeowners build back. We've are trying to do a rapid repair. It's taking some time to get off the ground, but our state housing authority has come up with a disaster assistance program that helps people that are in need, whose FEMA funds may not have covered what they needed, or they didn't qualify for an SBA loan, or those sorts of different things, that whatever the reason may be, that helps them get back to where they can live in their homes and hopefully get back to normal.
Can I ask, where does the money come from to fund the fortified roofs? Who's paying for that?
That is, we're state funded, and thankful for that. We receive an annual appropriation. It comes from a percentage of the premiums that are collected off of our wind and hail pool, our residual market, the premium policies, and then a portion of the other policies throughout the state, just regular indemnity policies that come in.
And how much, sorry to be so specific, but how much money does a household get to help with their roof?
Well, we have different categories of awards, and the max is $7,500 for a safe home and fortified, IBHS fortified, many of you all are familiar with that, roof retrofit. So while that doesn't cover everything, it does go fairly far ways and helps them get to where they need to be. Some of our contractors that work with us, we have about 120 different contractors that work with us right now, and they have come up with funding mechanisms, loan programs, and things like that to help them on that end too. So we do everything that we can to try to help those people get back to normal.
So I have two really interesting categories here. One is broadening what insurance means, and then thinking how we could make it actually reach people more effectively, even without a truly cataclysmic storm. The parametric issue, and then making people's houses safer so that they're more likely to survive a hurricane. For all of this, Carlos, clearly improved governance of some kind. You've been looking at this question forever. That's another category of things that seems to need to change in light of the insurance crisis, let's just call it that is hitting an increasing percentage of homeowners. We believe that something like 20% of mortgages will see their values decline as extreme weather hits those mortgages. Researchers are showing that. And that is really bad effects for people who can't perhaps or are on the edge of being able to afford that mortgage in the first place. So what ideas or thoughts do you have about governance at this point?
I think the fascinating part about that question is that each of the different segments that we've been talking about are governed by a different, literally different geography.
Yeah.
Right? If we're talking about insurance is primarily regulated at the state level, right? Mm-hmm. But so many local development decisions are decided at the local level, right? The land use decisions, I should say, are at the local level. Mm-hmm. So much of our mortgage market is national securitized mortgage markets, right? And so these are very different levels of organizations that in many cases aren't necessarily working together in a pre-disaster, in a mitigation scenario. In the post-disaster scenario, of course, we've developed this sort of vast, complex array of from federal FEMA, as it is, down to state governments at local level, just to respond and relief and longer term recovery. And even that's a little tenuous in terms of longer term recovery. Because things like the Community Development Block Grant for disaster recovery, it requires special statutory, special appropriation, is not statutorily authorized. So all of these pieces are working at different timeframes and different geographies. And that's the core challenge that we have. Governance-related issues are not going to be resolved until we actually start thinking about how all of these things fit in, focusing on the unit of a property, a household, right?
Mm-hmm. You'd think in an ideal world, we might be putting all the risk on the table, acknowledging it, and then saying, how do we measure success? What are we trying to get to? What level of thriving life, or whatever the standard is, are we getting to? How do we drive investments so that they support that level, whatever it is? And then perhaps how do we withdraw from areas that become too risky? If we were sort of some ideal planning petri dish, which we're not, clearly. But where can you see maybe private actors playing an important role in moving us towards planning ahead, which is the thing that Carlos is putting on the table for all of us, rather than just having 30 agencies respond to a disaster? How do we plan ahead? Any ideas on that one? Carlos, you want to start?
Sure. So private actors, certainly insurers are private actors, and the developers are private actors. I think the challenge that we're going to see is not for for moving people to safer places, for incentivizing people to financially to spread the risk between an insurer, between a local government, between themselves and their property. You have private opportunities. I think the challenge with a lot of low-income households is that you need a public entry point, right? Mm-hmm. People cannot afford to make the mitigation. They cannot strategies for their properties. They can't afford their insurance, and they can't afford to move.
Right.
So thinking about a combination of public and private partnerships is probably the ideal to help people buy time where they are before where they are is too far in harm's way.
Yeah, and I'll maybe address it from a philanthropic perspective. So one of the things that we're thinking a lot about is how do we encourage our partners and our community to understand that preparedness is the important part. What we see so very often is that once the disaster hits, that is when so many philanthropically minded people or institutions or corporations, they say, oh my God, I must give now. We see the destruction in front of us. And my hope is that we don't wait for the destruction, but we're actually donating before the storm, because we know that when we invest in communities before the storm, we are able to save so much more than if we invest after the storm. And so I will tell you in South Florida and Miami, I am trying as much as possible to let all of our partners know that the time to do it is before the storm actually hits.
Mm-hmm. And in some senses, the insurance repricing, this liquid, rapid repricing, is a very helpful signal to a lot of people, oh, action needed. Are you getting a positive response from your partner? partners in the philanthropic community?
I will say we have a handful of partners who get it, and they're at the
Yeah.
table with us. They are investing in our Miami Disaster Resilience Fund. They're thinking about how they're doing preparedness work, but I will say we are still at the beginning of this work. And so there are lots more partners who we're hoping to bring on and hoping to have this, this conversation with.
And your work really intersects with land use in a
Yes, it
fascinating
does.
way. As Carlos has mentioned, you've got a lot of land use authorities at the very local level saying, okay to build here.
Right.
And then the Department of Insurance says, but you're going to need a fortified roof. How do you think about making these things align perhaps better?
I think we're actually seeing in that PD region, we've seen really a community, response. We are seeing local governments hold meetings, public meetings, inviting people out to get a better understanding of just what is out there. How do you prepare ahead of time? What can they look to for possible resources when it does hit? We had a public meeting, I guess, back in the early spring of last year in Georgetown County, in that area, and we talked with people who had gone through those floods. So many of them were not even aware of some of the programs, the entities, the nonprofits that were out there to help. I really think we're seeing communities and local governments really kind of step up, and I think this is a real opportunity for us to all come together. I also have to say that we have a university there in that area, Coastal Carolina University, who has been very, very helpful in spreading that information and education and awareness throughout those communities. So I think there's an opportunity for a lot of different players to come to the table.
It is difficult also, though, for a local government because they say we're relying on property tax. If we keep talking about not developing, the developers won't show up and we won't be able to look like a growing, thriving place. It's a very, in a sense, a simple issue. How do you communicate at the same time risk and also prosperity for a local government? It's very challenging.
It's challenging.
Are you seeing anything in Miami that seems to take these two messages on board?
Well, I would say that we have a handful of nonprofits who are at the front of showing how you can do smart development, but making sure that you're building in some resilience elements. We see that in terms of our shoreline. We see that in terms of the pavements that you're putting down. And so sometimes, as we know, oftentimes government, they are not at the forefront of innovation. And so sometimes it takes other institutions to show this is what the possibility could be, so that then we can bring other people along. But we do have a handful of nonprofits that are thinking about what are the innovations that they can show and how are they using the money that they're receiving to again, just show an example, so that in turn that will hopefully inspire others to do differently as they're building.
Without putting you on the spot, do you have any particular programs you want to make sure everybody hears about?
Oh, I appreciate that. So Miami Waterkeeper down in Miami, they are doing some amazing work in terms of making sure that they are investing, again, in the types of pavement, right? And so when you think about, it's not just the hurricanes, but it's also, we face extreme heat, but also exactly that flooding. And so they're thinking about smart pavements is one example that I want to call out.
That are permeable, that allow water to go through and then maybe be stored and then discharged somewhere else.
Exactly.
And the city of Hoboken, we're going to be meeting with them later today. They've got all kinds of plans along those lines. They're doing a great job, but they've focused on it, and it's the root canal of policy work. Like you just keep working and working and working and working and making sure it happens. But new institutions, Carlos, I want to turn to you because we've got the federal level perhaps withdrawing at this point. Some we're hearing from, and some very local interest in being more responsible ahead of the time. Can you imagine regional organizations that could be helpful at this point to try to align incentives and investments to get ready before disasters happen?
Absolutely. And Nikisha's probably coming from the most famous of these, the Southeast Florida Climate Compact that was a coalition of counties that decided they needed to start working together about just sharing information, starting their planning processes together. Because that was kind of the development threshold was across all of those counties, and how they could start incentivizing investments that were appropriate for their communities. We're seeing places like the state of California experiment with climate disaster zones, right? So thinking about things like tax incremental financing, but taken to the point where you're investing in a wide range of infrastructure that helps support property in the appropriate places. That may even include non-contiguous areas, right? So not just a region, but a region composed of the edges of the region, working in collaboration to make sure that investment is being made in one place that may be, for lack of another word, less exposed in the longer term than another place. So thinking about those connections is absolutely critical. I'm happy you actually brought up City of Hoboken, because that was one of the interesting federal experiments, right? The Rebuild by Design and the National Disaster Resilience competitions that occurred. We're going back into the post-Sandy era where the federal government decided, let's invest in really thoughtful design competitions that involve scientists, engineers, designers, and social organizations in these communities, as well as the local and state governments, to think through what an appropriate solution would be in infrastructure. So those were obviously very flood related because it was after Hurricane Sandy. We have to start thinking of a wide range of multi-hazard incentives. And so a lot of state and local governments are thinking about their bonding capacity, are thinking about how they can finance this at the local level. It is disheartening to see things like the Building Resilient Infrastructure and Communities program grants be terminated, as well as a wide range of the mitigation grant programs that are coming from the federal level. So there really has to be an important thinking about the state and local government's financing of these. That's also thoughtful to the communities at hand.
Really appreciate that. So we're all taking different perspectives, which is one reason why this is such a great group to bring together. I want us to put ourselves in the feet of the insurers for a second, bring us back to the insurance question. So insurers in California, for example, have already paid out $12 billion for the LA fires in January. Their profits have been wiped out, they will say. And yet there's a tension because the California Department of Insurance wants to keep insurance affordable and available, but insurers may want to exit. So how, if you were running the Department of Insurance in your state, the closest we have to this, how do we balance these concerns? Is it possible to separate out the notion of risk, really putting it on the table, from subsidy for people who can't afford to pay for insurance? What's our top priority? Is it keeping the insurance market rolling, or is it some other set of values? This is a wide open question, but imagine yourself in the insurers and insurer regulator standpoint. Can I challenge you, Nikisha?
Oh, I'm not the expert here. I'm gonna.
Okay, all right.
Well, I would have to say I'm not the expert either, but I would say that insurance companies have been very supportive of our mitigation efforts in South Carolina and have supported it. They also, when we wrote the act in 2007 and had that implementation, of that law, we created several mechanisms, catastrophe savings accounts.
Oh, hey, can we slow down? Could you tell us about catastrophe savings accounts?
Sure.
Just for a moment.
Sure. So catastrophe savings accounts are an opportunity. They're very similar to your health savings account. They allow you to set money aside pre-tax specifically for your deductible or for anything that your insurance may not cover post-disaster. So any bank can set that up, and the homeowner can then put that money into it and then use it whenever it is needed. I think there are several other states that actually have enacted this as well, and it's been a really popular thing. As a part of our Safe Home program, we send out obviously information at the end that says your grant's completed, your contractor's been paid. By the way, here are some things that you all can do going forward. Catastrophe savings accounts, here are other mitigation measures you can take. While we can't give you additional grant funds, we encourage you to look at these sorts of things. So there's a lot of that. It has been going on. And the other piece that I was going to add was that we have seen insurance companies offer discounts for some of these mitigation measures. So we're really pleased to see that happen as well.
Making those connections. Carlos mentioned the Chicago fire. Insurance companies came up with fire safety standards. They're the ones who did it. And so they also came up with auto safety standards. You could imagine them coming to the table and saying, we're going to work closely with a local government authority. If you do X or Y, and here's some standards for you to adopt, we've got good data, use our standards. We can imagine an insurable community here. So Carlos, do you want to comment on that? Can you imagine that?
Absolutely. I mean, that's the history of the building codes and building departments and fire departments in this country, right? Any of these post-disaster, post-event institutions. The challenge that we have right now is that the vast majority of our properties, this includes 99.3% of our homes, are already built.
Right.
They exist. So they obviously, if a home is destroyed completely in a hazard, it's going to be built to a new code. But there's a wide appetite for building codes, particularly in hazard-prone areas. We saw in Florida after Hurricane Andrew was the first institution of a very significant step up in the building code. What do we do with the communities that exist right now in houses that have existed for several generations? How can we improve those in a way that is both sensitive to those people's desires to stay in their communities as long as possible with the real hazard risk that's increasing? And I think that's the core challenge in the question that you're asking about subsidy versus just absorption, private absorption of the risk.
Yeah.
At a certain point, low-income, vulnerable communities have suffered for several decades in this country, right? They don't have the same kinds of levels of resources, so there is going to be a need for a public intervention, both to help build the regional infrastructure that's necessary to protect them for a little while longer, as well as the property-specific interventions, insurance assistance, means-tested insurance assistance, for example, a national flood insurance program, and similar interventions by the state.
It's tough, isn't it? And it's tough to imagine regulating insurance at the same time, trying to keep the mortgage market
Not a job
rolling.
I would want.
Yeah, while retrofitting houses at great expense.
No.
We've got a bunch of questions coming in from online, so I want to move to that. Following up on the parametric issue, Nikisha, questioner says, I'm with the LA Unified School District. The recent fires devastated our community. I'm from Santa Monica. So awful. Everything's awful, but that was particularly awful. For the schools, do you have some recommendations for district-wide disaster preparedness and recoveries for schools? What can we imagine?
So one, I'll start with parametric insurance policies, right? So it is, it's interesting. It's been used for such a long time, but it is, I think, taking off here in the United States as we're facing disasters in this kind of new and different and more intense way. And so I think anyone who can tap into a parametric insurance policy, if it makes sense for them, they really should be, because I think it allows you to think about risk early, but say, hey, this allows me to do something different once that disaster happens. But I think from a school district perspective, and I'm sure the school district is thinking about this, right? What is it that the students need? We talked a lot about vulnerable populations. What do your vulnerable students or the students who live in vulnerable communities or perhaps low income or moderate income families, what is it that they need and how do you support them? Because again, it goes back to the idea that it takes them a little bit longer to recover. And so just thinking about how you can pull resources that allow you to invest in making sure that as much as possible there's an equitable recovery.
So preparedness for schools. Any other ideas coming from you guys, Carlos?
I would say on 2 points. One, on the one that you're bringing up. I mean, schools are social centers for most communities, right? And so thinking about how they become tools for education in the long term are also helpful. In the immediate aftermath of a disaster, right, that's a separate question, but they can be sort of a staging site. They're often shelter opportunities. So thinking through those kind of community nodes, a lot of communities like Miami have developed resilience hubs and that sort of thing. But thinking about the infrastructure that we already have, like schools, like libraries, is going to be absolutely critical. I guess on the insurance question, I mean, the school district is a public entity, right? And so The concern I have in the longer term, like many cities and county governments, may be that they are leading to self-insure because their risks are so great. And that would be an awful state of affairs when there are a lot of self-insured places that are going to experience severe events. And so I would think that there has to be an elevation of the governance question to the state level to help make sure that those school districts, and ideally at the federal level, right, that those school districts are supportive. There's a backstop to all of this. And the bigger you make the backstop, the geography of coverage of the backstop, the more you can spread the risk.
Fascinating. Any ideas?
Well, I know we have a rainy day fund that actually the governor created and set up, and with the intent of helping, going forward. And he has asked the General Assembly to look into that, and it's been in place now for a year or so.
So schools could take advantage of that potentially.
I think they possibly could. Yes.
Yeah, you would think that schools and libraries would be the places that you'd want to, because they are trusted nodes in this world.
And faith-based places that aren't public, but can certainly serve a public role.
Right. Terrific. Next question, it comes about parametric insurance specifically. There are challenges in scaling it up. Setting the trigger is being done often by people who have a pretty sophisticated understanding of what might or might not happen. There's an entire episode of Billions that turns on a parametric setting that is actually monkeyed with by a human being. So the weather report is slightly changed by someone in the, can you imagine this? So anyway, we don't want that, but there might be other challenges that come with scaling up parametric insurance. So let's think through. What can you imagine? Let's be positive about it, but also what are challenges with scaling up parametric? Nikisha is our expert on parametric insurance. What do you think?
Yeah, so I will say it was a little bit different for us because, when we implemented a parametric insurance policy, we were building it based on a structure that we already had. This just allowed us extra resources. And so I think, an easy introduction is, what are you already doing? How are you already preparing community? How are you already serving when there is a disaster that allows you to kind of build on a layer of it? And so I think that is an easy way to start when you're thinking about a parametric insurance policy and how it can supplement the work that you're already doing. But you're right, it is not easy to scale up a parametric insurance policy. You're, at the end of the day, you're investing in a policy that, to your point, you don't know if it's going to happen. Again, we took out a policy last year and it was for category 3, 4, 5 and it didn't hit. And I will tell you now, we are thinking a lot about, well, do we get a category 1 or 2 policy, because that is more likely to hit South Florida. And in fact, the idea was that we figured we would need more money in a category 3, 4, 5, but in reality, oftentimes philanthropic dollars are likely to flow when there's a category 3, 4, 5. But when there's a category 1 or 2, those dollars are less likely to flow because it feels like a really, just a strong storm. You all are used to it in Miami. And so we're wondering if actually our parametric insurance policy should be flipped. And so I think, that is the thing. Part of this is, you're trying to figure out what works, and we don't have all the answers, but we are kind of playing around and figuring out what sticks, and just trying to look at different options and figure out what serves our community the best.
Have you identified a partner who's willing to work with you on a category 1 or 2 storm parametric policy?
We're still working on it. So I will say the partner that we had is right now saying, well, category 1 or 2, we're not sure that we want to invest in that. So we're still in the process of figuring it out.
That's so interesting.
Yeah.
Any other thoughts about scaling up parametric, either Anne?
Well, we're working on a grant project right now that we were funded through HMGP funds, and really trying to explore. We don't know that parametric is the answer, but maybe it's community-based. We just don't know, but we're really trying to see what else is out there that can help those that are most vulnerable. So,
any ideas?
The only note I would add to that is that the trigger for parametric for a claim, right? And that's very complicated depending on the kinds of information about the weather event or the storm event, where within a geography it should actually, somebody may be eligible for the payout, right? So that's an important feature, that we have to have that kind of basic meteorological information and data to make sure that those are feasible to be able to scale up.
Yeah. Which is a call for accurate data at all levels of government.
Absolutely.
Publicly available.
Exactly.
next question, I want to sort of slow us down a little bit because we're not exactly technocrats, but we're here on this shiny set, thinking about having to leave places that are dangerous or have your community radically changed by its exposure to extreme risk. This is actually filled with grief and misery and discomfort and just a loss of connection to your community. And so the next question asks about policy ideas for non-economic harms. Non-economic harms. What, here, let me give you the exact question. By identifying areas of concern and offering actionable suggestions, what are ideas to strengthen policy frameworks and enhance the recognition, prevention, and response to non-economic losses and damages? So I want to step away from the Latin language that we all use and think about the real grief that accompanies these changes. How do we respond?
Health and physical health and mental health are probably the least resourced in a post-disaster recovery scenario, and certainly preparing for those, having sort of the grit and the mindset beforehand. There's no resources for that other than just basic health insurance sort of thing. So I completely agree that these are really going to be challenging questions that we face, particularly when the event happens. And I don't see anybody filling in that void other than the communities and the neighbors and the friends that one has within their milieu. I think some of the interesting examples that we saw over the last decade about social programming and social cohesion, particularly by a lot of local environmental justice groups and that sort of thing, was very interesting, right? In that they were organizing people within their communities to think about the long term as well as to look out for each other, right? To make sure that if an event happened, regardless of the scale of it, that there would be somebody there to help support them. And I think that's thinking about the social programming is as critical as the funding of the property mitigation, the funding of the regional infrastructure, all of that. And I think that's going to be a critical way to move forward. I do want to add one other point, if I could, in that we've actually been on a downward slope in terms of mobility in this country. Which is a surprise, right? Because we're a history of moving up and for jobs, for all sorts of things, for weather in many cases, and as many people keep moving to places that are likely to experience more heat, where they originally just wanted it to be warmer. So we're declining in mobility. So there is this opportunity, this this context in which we can rethink about what that social programming is, knowing that people are staying in their communities longer and that these communities are more exposed.
And perhaps may have to shift at some point, some communities.
That's exactly right. We have buyout histories, and we could talk about buyouts. But
right, that whole other move. I bet the Miami Foundation has a lot of thoughts about this.
Well, Nikisha, personally,
right.
have a lot of thoughts about this. You know, I think what this brings up for me, and I don't have the policy recommendation, but what I think about is just how expensive insurance is becoming, particularly in a market like Miami, where real estate is also incredibly expensive. And also we have a lot of people who are losing their insurance because of the old homes and just for many different reasons. And oftentimes these are happening in the most vulnerable communities, and they're at risk. And so I don't have the policy recommendation, but I definitely think it is something that we need to think a lot about, because oftentimes many folks are being forced to sell their homes because they can't fully afford it. And then that is when you see a large turnover in those communities. In Miami, we're seeing a lot of corporations that are buying up large swaths of our communities. They're not being held by just families anymore. They're being held by corporations who are then renting these communities out. And so you're seeing a rapid change in community, and the insurance is just making it so much harder. And you're seeing this particularly in low income and moderate income communities.
So I can imagine that it's just such a clear call for subsidy in that instance to support people so they can stay in their homes and retain the quality of their community. Thoughts about this, the non-economic harms part of the story?
Well, I think, our Robert Wood Johnson study really brought that home. And what we found was that some of the folks in the communities actually were banding together to try to provide help and resources. Again, the nonprofits and those entities that can really kind of reach out and help social services kind of, entities that were really needed. And I do think that for these areas that have been repetitively hit, there's a sense of real despair. I mean, it's, they don't know the fix. They don't know how to get back to where they need to be. And again, I attribute that to a whole host of things, awareness and people and entities to actually help from a mental health standpoint. I mean, help people walk through this, help them rebuild. So I see it. I too don't have all the answers for that one. I'm sorry.
We wish we could. Another sort of foundational question to hear is how to communicate what Nikisha said, which is that we would save a lot of money if we plan in advance. We would keep communities intact. We would help people continue to thrive and contribute to the economic growth of the United States, for God's sake. Mm-hmm. How do we communicate the benefits of preventative adaptation to policymakers and the public? Any ideas? Carlos, you want to start?
Unfortunately, the benefits are realized when the hazard happens, right? Mm-hmm. And so in many cases, you need the crisis to educate other people. Mm-hmm. In theory, people who are in neighboring communities and across the planet can see that if somebody has made a good investment, that it has paid off. We all knew the stories. I'm going to come back to Hurricane Andrew in Florida, of the homes that were built by Habitat for Humanity, for example. And volunteers putting way too many nails in the homes, and those are the homes that held up after Hurricane Andrew in Homestead. So there are all these great examples of people having really invested in the mitigation before the event. But highlighting those, showing those examples of when this has happened, you actually do get the benefit in the long term to your communities.
So more story, what else?
I was just going to say, we've never advertised the Safe Home Program. We've run out of money before we can, but our greatest advertisers are folks that have gone through the program at the baseball field, and one person will talk and another person will say, hey, what about this? Or your neighbor. And I'm thrilled for those kinds of interactions, because we've actually had entire neighborhoods take advantage of it, and so then you have multiple homes that have been retrofitted, and hopefully that's going to be save that community if we do have something like that. Dire.
And then I think I'll add to this. I echo everything that they've said, but I will also add that as a community foundation, one of our secret powers is our ability to convene and bring people to the table. And so one, I think it is repetition. So continuing to hit people over the head with the same message, but I think it's also bringing people in a room so that they can have conversations. And I think particularly it is bringing our policymakers in the room so that they can hear from our nonprofits. They can hear from people in community. We can provide solutions that, they're not the experts here. And so they want to hear from community. And so we have the ability to really bring them to the table and allow them to hear from community, hear from nonprofits, so that hopefully it sparks an idea, or they can take what the nonprofit is recommending and say, I want to act on this. And so this is where we get to be a strong convener in bringing our policymakers and our community on the ground, whether it be nonprofits or community leaders, to the table.
It's a great vision, sort of a nonprofit without walls. You let everybody in and they can talk there. It's a terrific place to convene. We're solving that one. Another big one is communicating, and Ann mentioned this, communicating to insurance companies in a way that actually works to then result in lowering premiums. And that link is difficult, I've heard from a lot of people. Do you have strategies to suggest for mayors in particular? How to get that message across that something's actually happening in my city that should result in an insurable market here?
Yeah, so in Miami-Dade County, we are thinking a lot about this. And so I want to just shout out our mayor, Mayor Daniela Levine Cava, who last year brought together, she held a convening where she invited the insurance professionals to the table. But again, it was also the nonprofit and it was leaders so that we can all hear from each other. And so I think a big part of this is sometimes we're all in our silos and we're talking to the same people and not listening to other folks. And I will say that was just one step. This is something that she is quite passionate about because we see what is happening in Miami-Dade County. But a big part of what she did was brought the insurance market to the table so that one, our community could hear from them because they are going through kind of their own issues that oftentimes we don't hear about because, again, that relationship isn't always there. But then it also gave them the opportunity to hear of the innovations that are happening in the philanthropic community, and it gave them the opportunity to hear what some of the nonprofits are facing and what their community members are facing. And so I would say that it was a success, and it is one of hopefully many that allow us continue to have kind of open dialogue with each other.
That's terrific. I did talk to one chief resilience officer for a major East Coast city who said, we don't have any data. That's a big gap here, that you can be telling stories to each other, but often the data about how, whether insurance companies are leaving or how much they're charging is like you're making policy based on sand. So that's part of the issue. Carlos, any ideas about helping people communicate?
Yeah, I mean, this is also goes back to the governance question, right? Because the insurance markets are regulated at the state level. The challenge for cities and counties is to sort of band together and figure out what levels of information and data the state should be collecting and aggregating so that they could provide that at that level of granularity for them to be able to make decisions. The reality is a lot of cities and counties are beginning to understand the risk, at least have some sense of the risk of exposure that they have. And so really working with their state governments is going to be absolutely critical. When there's a disconnect politically between local government and state government, I think is where we're going to see the biggest challenges.
Yeah, and they're substantial. We've got a few wrap-up questions that are giant. You're going to enjoy this. So one is, people keep moving to the risk, maybe in smaller numbers. That does seem to be attenuating a little bit. But how do we communicate to people who are just trying to find an inexpensive place to live that they're walking into physical climate risk? Ideas?
Well, I'll go back to realtors, communicating that, getting that out there where people will be aware of flood zones. Zillow could really do a lot to help. I mean, really in communicating the need for some of those, to be aware, to learn more before you walk into a situation like that.
Other ideas?
Yeah, so I did a study in post-Katrina New Orleans area that looked at questions of disclosure. I mean, Louisiana is viewed as the gold standard of disclosure for flood risk, right? And a lot of other states have adopted the same rules statewide. What we found, though, is a significant portion of the home buyers in our study knew the risk and still purchased the home because that was the only home they could afford.
Right.
And so at a certain point, the institutions that are backing up that purchase have to also play a role. The challenge is an additional challenge though is there isn't enough housing. Right. So if they can't purchase that home, there's nowhere else for them to go. Right. So thinking about long-term housing strategies is going to be as critical as issues of climate literacy, of property disclosures, et cetera. People need to have options and options that they can afford.
In fact, this entire question is a housing question.
I'd like to think so.
Yeah, overall.
It really is.
Ideas?
I echo what they've said already.
All right. So here's another big question. What kinds of research, we're sitting at a great research university, what would be helpful to local government authorities, to people in your organizations in terms of research products that would help you understand these issues better and work on them?
Well, I would actually say, besides products,
what weird word?
No, but studies.
Yeah.
It's a challenge to find out exactly what kind of discounts people do receive,
right?
Because of proprietary issues and things that just cannot be disclosed. I would love to know from a standpoint of what are people actually seeing. I will add to that South Carolina now requires disclosure in your insurance policy to show what mitigation measures are possible within South Carolina. But I still want to know from the back end. I mean, we have a number of homeowners that will tell us, this is what we got, this is how we're able to do this, this is what. But I think from a general, if we're wanting this to move forward, we need to have more than just anecdotal information.
Right, we only know about non-renewal rates, for example, because
Right.
the Senate Budget Committee forced insurance companies to work with it to provide that information through an
Right.
intermediary.
Right.
So data seems to be a great need. So if the university can get access to that data, that would be great. Other reports or things that you'd like to see?
So I'm curious about all the pilots that are current. I
Yeah.
mean, there's a wide range of research we could talk about, but all the pilot insurance projects
Yeah.
that we're seeing, including the parametric product that you've developed in Miami-Dade, the actual the benefit realized. And again, sometimes this requires an actual event happening, but that would be a first slew of tranche of projects I would like to see. A second would be thinking about what are the interconnected time frames, right, that would allow communities, I keep saying this, buying time and how much that time is before a transition is going to be absolutely necessary, right? How do we make that transition as soft and as long as possible?
Right. How do we smooth that out for people by planning? We have reached the end of our time together. It's been an absolute pleasure to talk to all of you. Do you have a last word you want to issue, a benediction for the crowd here on Earth Day? Nikisha, you didn't get a chance.
Preparedness. Right?
Preparedness.
I think that
Okay.
is the thing. Yeah.
All right, one word. What's your word?
Education.
Education. Carlos?
I'll use a phrase, we're in this together.
We are in this together. Thank you all. Thank you for being with us.
Thank you.
And thank you for coming.
You.